yeah, get it down.
Nice. Hey, everybody. Welcome to episode 2 of The Trader's Edge. You heard a little Rapper's Delight there from the Sugar Hill Gang. Kenny and I were talking, and just so everybody knows, you get more than just finance on this show. But we were talking about the fact that that's kind of how the name hip-hop got associated with that genre of music. That song came out in the late 1970s, and it went, before the internet, it went viral. And I know everybody in my school was able to sing that song. I was.
Yeah,
And,
I'm impressed already. Don just did the whole song right here in about a minute and a half. He didn't miss a lyric. I'm impressed. I had to go check if you were giving me the right lyrics. I have the lyrics over here on the page. All right.
My favorite was Master G.
Secret talents. We learn about your secret talents now.
But that was the thing, right? At the time that music came out, and nobody knew what to call it. And so I watched a history documentary about it, and they were like, play that hip hop song. And that's how it came the names. The genre is now known as hip hop. So if you're young, you got to go back. Rapper's Delight, the Sugar Hill Gang, that's part of history. So it's funny. I went to a restaurant the other day and I mentioned it to the cashier, and she's like, "What? What are you talking about?" It's a young girl. And I'm like, "You don't know who the Sugar Hill Gang is?" It was pretty amazing. But
right.
Anyway, so that's again. We're going to be talking.
No one will know any of our references soon.
Nobody.
I'm almost there.
I mentioned that's why we wear the hats, because Kenny and I are both bald, and we don't want the light reflecting off and blinding anybody. Kenny's wearing the same hat, the Grateful Dead hat, because he's too cheap. He only has one hat. He's wearing the same one as last time. I'm wearing another Discord hat, a little different color than last time. Shout out to my son who works for Discord. I'm banking on, that they're looking at going public, and I'm banking on him taking care of his old man when he retires. So good luck with that. So my name's Chris, but most people know me by my online name, which is in the caption there, and it's Don Corleone 77. Just to be clear, by the way, it's not Don, it's Don. That's the Italian pronunciation. So please call it Don, not Don, okay? And also known as the Godfather. And I'm here with my co-host, the incomparable Kenny Glick, also known as the grandfather of day trading.
Yeah, I got a lot of nicknames, but we'll save that for when we have another half an hour to spare.
the Abraham of assets.
You like that one?
Barack of bread.
There you go.
The Elijah of earnings, right?
Yeah, you got a good memory. The Frank of funds. You want to keep going? All right, let's go.
We'll have one episode where you do the entire alphabet.
I got you. Yeah.
Coming up.
I could do it by holding a match as it tries to get down to my finger. That was the. We were doing that. For some reason, I was talking fraternity with my son and all the dumb things that we used to do. They don't do some of that stuff anymore. We were just talking about the sororities. The sororities don't have the pledging. They don't torture their girls. They just you rush, and then whether or not you get in, and next thing you know, welcome. And then they just welcome you in all open arms.
I didn't know that the sorority thing was such a big deal.
Oh my God.
But now I've been seeing these viral things now with all these different sororities, right? It's like a big thing. It's crazy.
Yeah. My daughter went viral on one of hers down in UGA, so it's a lot of fun.
That's right. You don't forget, you said you're going to give me an autograph. So
that's right. Forget. Oh, I got to get an autograph first. So.
All right. Well, again, this is episode 2. Just to quickly recap, we're going to get into some deeper stuff today, some meat and potatoes, if you will. But I just want to recap episode 1, just so in case maybe some people saw part of it, maybe they didn't see it. But in episode 1, you got to know a lot about me and Kenny, our backgrounds. We also outlined what we'll be discussing in this podcast as a series on a regular basis. And that's really designed to help you, the viewer, become a consistently profitable trader. That's our goal. Now, again, but this show really, to be honest, it really has a broad reach, hopefully. A little something for everybody, whether you're just someone who's interested in the stock market, maybe you're a casual trader, that's fine. Maybe you're an investor and you just want to learn a little bit more. Or maybe you're really into, you're a sophisticated trader. And to have somebody like the godfather of day trading, to be honest with you, a guy like Kenny, that's more valuable than anything I can imagine. So again, we'll cover a lot of different concepts. Some of the things we talk about, you'll hear consistently. Terms like, for example, edge. The name of the show is The Trader's Edge, right? And in trading, what an edge is what you do to go into a trade. When you go into a trade, you want the odds to be in your favor. And so you could do a number of things, but that will be your edge. And different people have different edges. Kenny's edge is different than my edge, but that's what we want to teach you, what an edge is, so you can develop one for yourself that fits your investing profile. Another term we talk about, and we'll talk about over and over, is having a system, because it's really important to recognize you're not always going to be right. And having a system is what protects you so that you can stay in the game. You can consistently make money over time. You don't want to experience catastrophic losses that are going to wipe you out, right? And the system is critical to do that.
It's funny. The word system, I remember when coming up back in the day, my father and I were always looking for something to do. We used to get the newsletters. When we heard the word system, it was always kind of like in that negative connotation.
Yeah.
It's kind of dropped off. Hey, I got a system. Oh, do you? Right? Everyone's got a system, right? But now it's evolved, kind of like the word rigging too, manipulation. A lot of people use it wrong. It's always a guy that bought a stock that tanks and say, "Oh man, the system's rigged." But it really is rigged now, and it is manipulated. We see it as far as I'm concerned with algos. But that word system, I'm glad it's kind of like gone. It's not as evil anymore as it used to be. But man, it was like if you said that out loud, people didn't trust you. But now, if you don't have a system or the edge or that discipline, then you're lost.
And I think some people think when you use the term system, it's like, oh, that's boring, right? Like it's repetitive, it's mundane, but that's what professionals do, right? And that's what we do. Kenny and I have spent many years developing our systems that work for us. And without a system, I have to be honest, we brought up in the first episode that people who try to become full-time traders in the market, so this isn't everybody, right? These are people who believe they could do it, right? You're not going to try unless you believe you could do it. Of the people that believe they can do it, after 5 years, 93% of those people are no longer trading. So what does that tell you? This is not an easy profession. It's not an easy endeavor. And so what Kenny and I want to do, we don't want you to be one of the 93%. So we want to teach you things that we've learned from people more knowledgeable than us. And Kenny's been around since the 1990s. So what he's learned from experience, what we've learned from our own experiences, and also what we've learned from people that who taught us. And we want to give you that information to help you on your journey, because we want you, if this is what you want to do, we want you to be around 10 years from now making money, okay? If you missed episode 1, we'll have a link in the description below. You can click on it. If you want to know more about me and Kenny, that's really important, because you got to trust who you're going to be listening to. So hopefully, if you like what you hear, you feel good about us. Yeah. Hopefully,
most of the stuff about me on the internet is actually positive, which is crazy. Crazy. After doing this for 30 years, and I threw myself out on YouTube videos back when YouTube first came out. So, man, I've lived my life basically on the internet, and starting chat rooms back when AOL was a thing. That's why I still use the AOL address, which is
I didn't even know AOL. I didn't even know that still existed in AOL.
Yeah, they actually shut off dial-up just last week. Finally.
Really?
Oh
my gosh!
They stopped issuing the floppy disks. I think they were still doing it for some reason. I don't know why, but I just like holding on to the old stuff. If it ain't broken, don't fix it, right?
Yeah, 100%. Well, that's what
you give out your email address. People just say, oh, "Okay, cool." I say KennyGlick@AOL.com. I always get a reaction, and that's what I want. So
right.
It's a think piece.
Well, how many people have been trading since the 1990s?
Right.
I don't know many. Right.
Yeah.
And I mentioned that in the first episode. I look at Kenny like I mentioned growing up. I listened to the Yankee broadcast. He's like listening to Phil Rizzuto. a guy who played the game, a guy who played with the superstars, right? I don't know that side of the business. So anytime he talks, he's like that old E.F. Hutton commercial when
Yeah,
Kenny talks. Like
say.
he talks, I'm listening, right? I want to hear what he has to say. And sometimes Kenny will say things that are just like off the cuff, and I'm like, holy cow, that's really deep. And for him, it's just like another sentence, right? So you got to listen carefully when Kenny's talking. So let me just recap. There's 3 sections of this show. I want to make sure it's clear to everybody. We'll be doing it each week. If you don't have a full hour nowadays, it's just not. You could always go back and watch a recording. So hopefully you can quarantine an hour if it's something that's going to benefit you. Hopefully you'll do that. But we're going to basically have 3 sections of the show. Each will be about 20 minutes. The first section is going to be focusing on what we mentioned earlier, how we develop an edge, what our systems look like, how we look at the markets, what's going on with the markets, those type of things. The second part is going to be lessons we've learned from experience, which is just things over time that you're going to learn. You're going to think, I know I did. I thought I knew it all. I thought I knew you didn't have to really teach me. I'm pretty smart and I know everything. And man, you can get really beat up. But you know what? That's part of it, right? We've been through things. We've made mistakes. And the beauty is hopefully you can learn from those, right? And again, stay in the game, learn from the mistakes. But we want to share with you some of the things we've learned that hopefully you won't have to experience yourself if you can listen to what we have to share with you. I tell people, like, I don't need to go to prison to know I don't want to go to prison. I can just listen to people who've been to prison and know I don't want to go there. So hopefully we can share information from our experiences that you can benefit from.
So I have a tattoo on my ass that says, if you can read this, I must be in prison.
I chose Kenny as a co-host, and I'm rethinking that right now.
I'm just here for comic relief. What am I doing here?
All right, and then the third section is going to be, we're going to kind of recap the week, like what we experienced during the week, as well as our thoughts moving forward. And I'll be honest with you, I mentioned to Kenny, I think a lot of people are going to gravitate toward that third part because we might talk about individual stocks, things like that. But I want to emphasize, and I think Kenny will agree with me, the first 2 sections are where you're going to really build yourself as a trader, where you're going to really learn how to do this on your own, right? Learn the concepts, right? People always ask us all the time, what do you own? What does it matter what I own? Like, I could be out of a stock. You may ask me, and the next day I might be out of that stock. And you wouldn't know why, because you don't know why I was even in it to begin with, right? Learn the concepts. Again, that expression, right? Give them fish you can eat for a day. Teach them how to fish. You can eat for a lifetime, right?
I mean, for me, as far as day trading, I do a show in the morning, and then later that afternoon, I'm on the opposite side of the trade that I was describing how much I liked in the morning. And if you just listen to the commentary, you'll think I'm trying to pull some scam, but that's the trade, especially for day trading. And again, when the market's volatile, you should expect to be on both sides of the trade. So you have that morning session, and then later that afternoon, the stock completely reverses, and you take advantage of the reversal. So yeah, it's a big thing. Time frame is everything.
Don't ask for recommendations of individual stocks.
Yeah.
Like, that's not what you're here for. You're here to learn the concepts so that you can develop and you can become proficient and you can manage your trades in a way that works for you, right? That's our goal.
Right.
Kenny? All right, and before we get into it, I just want to add one joke to start off with, just in case. I know Kenny's like a little nervous here, but hopefully, if you pick up nothing else today, you heard something funny and it made your day brighter. It is a joke, so it's related to money, so I thought it'd be appropriate. So here's a joke. There's 2 bills, okay, a $100 bill and a $1 bill, okay, and they're both worn out. They've been in the circulation for years and years. They're fading out. They're about to disintegrate. So they get taken out of circulation, and they're waiting to go to the federal paper shredder in the sky. Okay, so they're waiting. They know this is the end of their life, and they're they're just waiting for their turn. And the $100 bill turns to the $1 bill and says, I got to be honest, I got nothing to complain about. I've been all over the world. I've been to sporting events. I've been to the World Cup. I've been to the Super Bowl. I've been to presidential inaugurations. I've been to some of the greatest concerts ever. And it's been just a wonderful life. I can't complain about anything. And he looks over to the $1 bill, and the $1 bill's got like a sour face. And he's like, what's the matter? I'm like sharing with you the joys of my life that I had as a $100 bill. What's with the sour face? Like, what did you do with your life? And the $1 bill looks back at him and he goes, for me, it was just church, church, church. You with me, Kenny?
Two shots for that one.
So sometimes, when we're doing things that we like and we want to have a good time, the $100 bill might be more appropriate. Sometimes when we're being charitable, maybe we're not so generous.
Uh-oh.
Okay, so when you have to explain the joke, that's a little bit, I tell you, right? All right, so you got the joke. All right, let's get into the meat and potatoes here. Before we dive in fully, I just did want to give a quick shout out to a member on StockTwits. His handle is, get this right, 1111bro, 4 ones bro. And I want to shout out to him because he's a teacher in high school and he's building a curriculum for his students to teach them about finance. Cool. And he said he may use our show. He might show our podcast to his students. So we're going to keep Kenny on a leash today. So he wanted to make sure it wasn't rated better than, what's that, NC-17 or whatever?
We'll go PG-13, right?
Yeah, we'll stay PG-13.
Shout out teachers, my whole family.
Hey,
mom, dad, sister, uncle.
Truthfully, by the way, whether he shows the podcast or not, the fact that you're teaching young people about finance, kudos to you, because it's sorely needed in our society. And that's our hope. If you can learn this stuff when you're young, I taught my son when he was young, and he's 28 now, and he's on his way. That's why I wear the Discord hat, I think I mentioned. So I know where he is in his journey, and he's going to be way better off than his old man because he started young, right? So learn these things when you're young. I hope some teenagers are tuning in and watching us.
Yeah,
that's where you can. Warren Buffett understood this, right? The power of compounding. The earlier you start, the more you can amass big wealth over time, right? So hopefully we're opening up to everybody. All right, so let's get into some of the meat and potatoes. Again, when we mentioned edge, just to be clear, we're talking about examples of what we do to put the odds in our favor. What are some of those examples? Let's make sure we're clear so people understand. That may include things like technical indicators, right? For example, a lot of people use moving averages, things like RSI lines, Bollinger Band, all kinds of technical indicators. And that's what Kenny focuses on. There's one in particular that Kenny's used to build his edge, which is, the term is the VWAP, right? The volume weighted average price. Yeah. That's one way to build an edge, right? Another way might be you could look at fundamentals, like looking at the companies, what their earnings look like, what their product innovations look like, what their management team is like, right? That's kind of the William O'Neill approach, right? The CAN-SLIM method is another example of how you can develop an edge, put the odds in your favor when you enter into a trade. Some people use analyst opinions. Some people use, it's funny because at one point I had an account with Morgan Stanley, and I was asking my fund manager about stocks, and I said, what do you know about these stocks? What do you think? And immediately they went to the analyst opinions. That's what they used, right? And they're professionals, so some people do use them, right? So that's another example. Some people trade off of news as catalysts, right? Just another example of how you can try to put the odds in your favor, right? I use a combination of a lot of different things. Again, Kenny's pretty focused, and he'll explain why in a moment, right? Unfortunately, I have to say, some people, their edge is somebody told them about a stock, or they listen to the quote unquote experts like Jim Cramer or whatever. And I have to say, if that's your edge, you may want to reevaluate it. Okay. Again, we want to teach you so that you're not just relying on somebody else to tell you, right? Because we're all going to be wrong at times, right? And that's why the critical part, having the system. I just want to mention this really quickly. There's a commencement speech that Roger Federer has made at Dartmouth last year, and it's gone viral. You may have seen it on Instagram or whatever. And it was beautiful because Roger Federer, in the commencement speech, he said, one thing in tennis, you will never achieve perfection. Perfection is impossible in tennis. And then he went on to say that he won almost 80% of his matches in tennis. And then he looked to the crowd and he said, well, let me ask you, I won almost 80% of my matches. What percentage of the points that I played in those matches do you think I won? Roger Federer only won 54% of the points. Think about that. 54% of the points, and he was one of the greatest tennis players ever. Okay? We're not going to win every time. We're going to make mistakes. We're going to be wrong. The key is we look at probabilities, and when we're wrong, we don't. Kenny mentioned this in episode 1. When you're wrong, don't stay wrong. Right? Admit we're wrong. Be willing to admit you're wrong. And that's why you have to have the system so that you can cut your losses. It doesn't become catastrophic. We don't always want to talk about math, but if you lose 50% on a trade, if you hold on to a trade and it goes down 50% and you sell, how much do you have? Can you get that calculator out? How much do you have to make on the next trade just to break even if you lost 50% on the first trade?
You have to make math on the quiz.
No math. You have to make 100% on your next trade. Like, how many times do you have 100% gainer?
Right.
Right. Don't let yourself lose 50% on a trade. Make sure you have a system in place so that you can cut your losses quickly so that you don't have to. There's always another trade.
That's also assuming you put an equal amount of money into every single
equal amount of money into everything,
yeah.
Of course, right? All things being equal, right? But so we talk about edge, and I'm going to turn this over to Kenny. Interestingly, I found it fascinating. Kenny mentioned on the last show, like there's one specific pattern for Kenny where he's found that it's successful about 90% of the time. Now, to me, that's amazing. Like, in case you don't know, 90% of the time that's pretty good. To just give you context, like if you get pocket aces in Texas Hold'em, like that's the best hand you can get, and everybody's excited at pocket aces. You only win 85% of the time.
Well, when it comes to me, 20% of the time, I always get beat by the Jack 4 suited or the 9-10 diamonds guy who went all in. Yeah, I have no luck with the.
If you're not Kenny, the average person wins 85% of the time, and he's got a trade that works almost 90% of the time. That's incredible. So let me turn it over to Kenny. I want to let him talk a little bit about his edge. I'll share a little bit about mine, and then we'll move into lessons, and then the section 3 we'll talk about observations. Kenny?
Sure. Yeah, we spoke. I'll take the floor. Hang on, I'm gonna boot you for a second. Hey, how are you, everybody? Good. Now you can see all the junk that I'm surrounded by. I'll get to the hanging medieval weaponry behind you over there on the tripod. But I'll get right into it. My edge right now is all technical analysis. I've been jaded and cynical right from the get-go because I was born into the worst part of Wall Street, the boiler room. And I got convinced to be a stockbroker because I was doing stand-up comedy. And somebody approached me at the end of the show. And it was just, I'm from Brooklyn. So these guys were out in Long Island. And you've probably seen the movie Boiler Room. Everything about that movie was dead on. I actually was in the meeting, not with Ben Affleck, but that exact meeting where they threw the keys around to the floor. The guy made fun of my suit, told me how much money I was going to make, and I should go start spending the money I didn't even have yet because that's how rich I was going to be. And then he said, I need $300 for the books. but what? And it was just the most bizarrest thing I've ever seen. Just pitching stocks that when I learned they weren't even real companies, and you couldn't sell these stocks to the open market. Fast forward, when day trading came along, it just gelled with me, because now I don't have to do anything. I don't have to talk to anybody. I'm my own person. And I was starting to learn about how the market worked. And I was like, wow, this is an amazing opportunity where we got an edge. And the edge was we were able to become market makers. We were able to join the bid, sell the offer. We were able to see the market makers on level 2 and see the order book. So that was something that nobody had ever seen before. And it leveled the playing field to the point where the market makers, Goldman Sachs, Merrill Lynch, Bank of America, they used to call us with like threats. They wanted to fight us on Stone Street. It was hilarious because there were so many glitches in the system. You guys know small order execution system and the SelectNet system. They were so many glitches, sticky bids, and we weren't really trading. We were just exploiting this system that we were allowed to now, join in on. And then we learned more about tape reading. We were just following the money. It really wasn't about technical analysis. Fast forward, 20 years later, and 3 basically ass-kicking destructions of my account and my life. Because again, as Don was saying, well, I'll just call you Chris. It's easier that way. What Chris was saying was, you get to the point where you think you do know more than the market, and you are humbled. And I've been humbled 3 times, to the point where I walked away. I pretended I had a job for a while. I never even told my wife how bad it got. And I just wandered the streets of Manhattan, just trying to figure out what I was going to do. And then I went right back, and I was like, all right, listen, I've got this thing that works. It's reversion earnings, basically. So I look for stocks to fade the earnings gaps. And again, I love the trade. It's been working forever. But then around 2012, 2013, somebody that was using VWAP exclusively for trading, which didn't really make any sense to me, because VWAP was just this number at the end of the day that the institutional trader had to beat. The way I was plotting my candlestick charts, he said to me, and his name was Zach Hurwitz, he was a disciple of Brian Shannon. He said, you're plotting VWAP and prior day VWAP almost like inertly, or I forgot the word he used, but almost like preternatural. It was, and he was like, this is incredible. You're actually a VWAP trader without using VWAP. Let me show you the levels that are actual VWAP levels. And for about 18 months, because most people catch on after 3 months, but I'm a feeble-minded guy. The light bulb really didn't go off for like about a year and a half later. I was like, you know what? I think this is all I'm going to do now. And because it got me into a trade that I knew worked. Now it's getting me into that same trade ahead of time. So where I was buying into a trade or selling it short, now I know where I was doing it then. Those are levels where I'm actually starting to take profits already on a trade that I know is going to get better. So, 30 years later now, since basically 2013, it's really all I'm doing. It's gap reversion using VWAP on earnings reports, meets the VWAP. So it's chart pattern recognition, meets the VWAP, meets this concept that is very easy to understand. And I'll get into more of it later. But, when you walk in and, let's say you are that swing trader or that investor, and you bought more of the stock, or you went into the earnings report feeling bullish, the company reports great numbers, and the CEO's on TV, everybody's high-fiving, and then the stock tanks that day. And the investor says, hey, what gives? It's just that there were some institutions who made the bet, and they won their bet, and now they're cashing out of that bet. So you'll have that short-term volatility. It's not that anything's wrong. You were right about the numbers. You're probably going to be right about the stock over the long term. But I trade that moment. And in that moment, I've got the edge, because I know there's going to be fading. And then I let the VWAP confirm that notion. It's not like I'm just coming in, all right, great numbers, I'm definitely shorting the stock. No, that's the concept. But then you wait for the technicals to show up to then validate your idea. And that's when we react. And those trades have very limited risk and pretty good results, as well as returns. And that's basically it in a nutshell. And there's 3 or 4 different ways to look at the market. And there's so much opportunity just focusing on that everything starts to just fade away. And then, then I make fun of Chris here by talking about like fundamentals. I don't care what this company says. I don't even know what they do. And some of these companies I trade, legitimately, I don't know what they do. And that's why this is the most fun I've had as a trader in a long time, because all the funny stuff I've been saying that people thought I was just being sarcastic about, it's now true. You're buying stocks because of the ticker symbol, because it's just fun, and then it starts to go up, and then people say, "Ooh, new shiny object," and then it becomes, a viral sensation, and then the chat rooms, and because the internet, and we're so interconnected now, that it used to be just a handful of people. Now it's the world, and we're all looking at the same thing. So when that shiny object starts getting shinier, everybody chases it, and that's how we make money.
Kenny, what does Upstart do?
Upstart, I think they're like a money lender, right? Something like that. Maybe.
No, that was a joke. I'm sorry. You don't remember that viral clip?
No.
There was a guy, I don't want to mention his name, but he was on CNBC, and they asked him one of the stocks he recommends, Upstart. And he's like, "What does it do?" And he was like, "I'm sorry, I can't hear you. The mic's not working."
That would be me, yeah.
Yeah, but the right answer was he didn't know. Like, you didn't have to say the mic's not working. It's okay if you don't know what it is, right? You may
That's
not.
Another thing
may not
about this industry, nobody ever admits they don't know.
Right.
That's why I like the person who actually says, "I don't know." Nobody knows everything. And even in this industry, that's why when somebody says they know everything more about everybody else, that's so off-putting to me, and we'll just leave that there.
Yeah, I have one of my close confidants on one of the forums. One of the reasons I connected with him is his handle. Shout out to him. Is Ron is wrong. And that's his handle. He's like, right. I'm wrong sometimes. Like, I want you to know, I'm putting it in my name that I'm wrong sometimes.
Oh yeah.
And we connected that way because you, like I said, you're not always going to be right, and that's fine. That's perfectly fine. I'll just add, like, for me, Kenny mentioned, again, we talked about different edges. Kenny's going to, this is why you need to tune in every week. Like what Kenny just shared, some of you may be new to trading. That might have been like, whoa, that was a lot of information. And you might have used terms like, gap reversion, right?
Right.
You may not be familiar with that yet, and that's okay. Stick with Ken, tune in every week. Over time, you're going to see how Kenny makes these trades and why he's been doing the same thing for over a decade now, right? You've been doing the same trade.
And you said it before, it's supposed to be boring.
Yeah.
It becomes monotonous and redundant. But making money, if making money is redundant and monotonous, you're a winner. And that's really what it is. I like it. I make it entertaining and exciting because I'm a performer and I do this live show for 4 hours a day. So I want to make it engaging and everyone's having a good time. But at the end of the day, you're doing the same thing over and over and over again, especially when you have something that works. People that do something that doesn't work, that's the definition of insanity. But we've got something that works pretty well. And just if you stick to it, and that's the hard part, because there are so many shiny objects right now going around more than ever before. Everybody's putting money in everything that's moving. And it's just, you got to be sure what you're doing out there because, man, and I'm not even talking about just the scams that are out there. I mean, there is just so many different avenues to try to make money right now in finance. It's bewildering. So
your members tune in with you 4 hours in the day.
Yeah, we never stop. Lately, we've been going basically 8 to 8. I mean, it's unbelievable. I mean, I don't talk for 12 straight hours. I got a couple of guys that come on. I could talk for 12 straight hours because I love this stuff so much, and I love talking about it. I love showing old dogs some new tricks. Not calling you an old dog, but I have a lot of people that just are retired. They've got some money and they want to do that, creating alpha. And I show them how to do it. And if you're in that position where you have that money, where you're not completely nervous about every trade, oh man, that really does help you. Because if you're too scared to trade, it's hard to make money with scared money.
I was wondering why you never reached out to me, because you said if you're older, which I am, but then you said if you have money, then I realized that's why you never reached out to me. I'm not in your universe.
$2 in a dream, baby.
So Kenny looks at that, Kenny, and again, over time, keep tuning in. He's going to teach you about this VWAP because it's, again, if it works, some people, by the way, I've talked to people about these concepts of systems, edge, and they don't want to, ironically, like I'm like, this is going to improve the odds of you making money. But for them, it's just too rigid, and they don't want to do it. Like, they don't want to discipline themselves to do it. And you can do whatever you want to do. That's the point, right? You could do whatever you want to do. We're just trying to put the odds in your favor, right? And doing something that works over and over is putting the odds in your favor. So that's why keep listening to Kenny, what he's talking about. If you're a day trader, if that's of interest to you, you got to learn the VWAP. If you're a day trader, you have to. Like, if you don't, you're losing a massive opportunity.
Yeah, and you're missing out on really just the evolution of trading, because the evolution of trading is algorithmic. You heard high frequency trading. You don't hear that high frequency trading term as much anymore. Now it's just algorithms, but that's part of it. And the computers have taken over a lot of the work that's done by institutions. It's pre-programmed, and when you follow the VWAP, which is an institutional, basically the money flow, you'll see where their orders are going in. You'll see the ebb and flow of the market. And, again, I make fun of the fundamental guys a lot, because now I just, it's fun to do that also, because, I didn't go to school for any of this. I have basically a school of hard knocks, really. But, I do like knowing what these companies, are all about, just to give me that, it gives me a little bit more of an edge. But still, no matter, if Warren Buffett called me and said, Kenny, I got something for you. Oh, yeah? I would still wait to buy it till VWAP confirmed my buy. That's how serious I take VWAP. So I love knowing about it. And I own a few stocks. I'm a big fan of Palantir from the IPO. Huge fan, because I believed in what their destination was, and what I believed they had these government contracts, blah, blah, blah. But still, there was a point when the stock was getting hammered, and it got caught up in the meme sensation. It kind of ruined the stock for a while. And then it played out to what I thought it was going to play out to be a great stock to own. But, again, there was a moment in there where I was just like, oh, man, I don't really like this anymore, because, the Reddit mafia got involved in the meme stocks, and it became something different. So I had to wait for all those guys to get washed out to start taking the stock serious again. And once they were done with it, broke back out, and obviously, where the stock is. But yeah, just I always use my VWAP to confirm everything I do now.
And I'm actually incorporating more of the VWAP on my entry as well. I'm more, and this might be helpful to kind of put it in perspective, because Kenny, he said if Warren Buffett calls him, he's going to verify. When Warren Buffett does call me, because he does call me personally, there are things that I look to verify as well
before his next move. Yeah.
So what I do, Kenny's, as a day trader, he's predominantly doing trades. He's in and out, usually not holding. Is it fair to say, Kenny, you're not holding stocks overnight most of the time? Or maybe if you are,
yeah, right.
Some you may, but that's not your bread and butter. Right.
Well, we could talk about the evolution of swing trading. Just briefly, a swing trade for me is a day trade that's gone well. The swing trade for most people is that it starts as a day trade and it doesn't go well. And they're like, well, I guess this is a swing trade now, because they just got to hope it comes back the next day. If it's not in our favor, we don't even entertain the idea of holding it overnight. But there are certain situations where if the trade's going really, really well for us and it's coming down to, you're at 330 and you're thinking, hey, there's really no reason to get out of this right now. We do. We'll hold some stuff.
Yeah. And so what I do is a little bit more geared towards swing trading. When we say swing trading, and to be clear, I could hold a stock anywhere from 2 minutes to over a year. I've held stocks for over a year, right? But that's the way that I do it, because it's what I like. I feel comfortable when I enter into the trades based on my edge. I'm using multiple variables when I look at it. I'll mention two today because I think it's relevant to the current market. Two of the variables I look at, one is the making sure, and it's just part of the CAN-SLIM of O'Neill's method, the M in CAN-SLIM stands for the market, right?
Tell the folks what CAN-SLIM's all about, because again, we're old and people don't even know what we're talking about now.
Each one of the letters in CAN-SLIM, you could look it up online. They all stand for something. Like each one of those 7 letters,
right,
is something that O'Neill looked at. William O'Neill, he's a genius. He's the one who founded Investors Business Daily, and he was the one who kind of was one of the first guys to talk about chart patterns. A cup with a handle, a saucer hand, all of that, like O'Neill was kind of like the pioneer of that stuff. And he realized that certain stocks, there were patterns. And if you could recognize the pattern, you could give yourself an edge, right? And so if you read his book, How to Make Money in Stocks, he talks about those patterns and what to look for. And so his CanSlim method, each letter stood for something. The C stood for current earnings. The A stands for annual earnings, right? So each letter is something he would look for in his stock to say
Right.
the probability of this stock, it's a higher probability that it could continue to go higher, right? But the last letter in CanSlim, obviously M, stood for the market overall. And O'Neill recognized that in certain market conditions, some of these trades would have higher success rates. When we're in a market where the risk is on, a lot of people look really smart, right? There's an industry expression, right? In a bull market, everybody's a genius, right? And right now, the last 4 months, a lot of things have been working, right? The NASDAQ, I think over the past 4 months since Trump paused the tariffs, the NASDAQ's up nearly 40% in a 4-month period, right? And in that period, if you bought and sold in that period, kind of hard to lose. I'm not saying you can't lose money, because you certainly can. You could buy the wrong stock, you could be in the wrong place. But if you're really into the analysis, there were a lot of things that were working for you. So for me, over the past 4 months, the NASDAQ was up almost 40%, the Dow a little bit less, the S&P a little bit less. I was up over 200% over the last 4 months based on what I do, which is finding the edge. And I could be in and out of stocks. Sometimes the stock will move quickly. I will book my profits and take my profit. That's part of my trading strategy. There are 3 fundamental aspects of my trading strategy. One is dimensionalizing the risk, understanding the risk going in. The second thing I do is I systematically take profits. And the third thing I do is when I'm wrong on the trade, I cut my trade so that the losses are manageable. And those 3 parts are what I do. But recognize now I'm a 60-year-old man who's married, and I got to keep showing I'm profitable. So I'm not a massive risk taker. I'm more conservative. I believe over time the markets will over time go up. But if we go through a serious downturn, and we haven't had one for 15 years, like we haven't had a real recession for 15 years. People say COVID was a recession. COVID was an abnormality, right? It was an aberrant event that occurred. And when it did, the government flooded the market with trillions of dollars. What I'm talking about in a recession is when people wake up in the morning and are worried about losing their job, like the economy's softening, people aren't spending, that. And so as long, if you go through that period, it's not as easy to make money. We'll put it that way. So what I do, part of what I do, and I do it with the macro market, and I also do it within sectors of the market. I'm looking for what we call inflection, right? And so what I'm looking for are where the risk is asymmetrical, right? There's a higher probability of moving up. There's still always going to be risk of going down. But if certain dynamics are working, I look for that inflection, that over time, I think that sector is favorably disposed to go higher. Okay. So I'm going to give you an example. I made a post online about this. And so what I did recently, and this is me. So again, don't do what I do. Listen to why I do what I do. See if it fits within your system. And then make sure, take the information I give you, but you assess it too, right? Don't accept it because I say it. I could be wrong. So you need to be able to look at it, discern it, see if it makes sense to you. So what I did, with that gain, that 200% gain over the last 4 months, like I did pretty well. So for me, I felt we call it the line of least resistance in the market. In April, the market was heavily sold. It was sold off pretty extensively. And when Trump paused the tariffs were the reason really the market was going down so dramatically, rather precipitously. And it was because the market doesn't like uncertainty, and people didn't know what the effects of these tariffs were going to be. And so the market was selling off. Nobody was buying, right? Buyers were stepping back. They're like, I'm not going to go in until I feel comfortable. And then on April 9th, that's when Trump paused the tariffs. And at that moment, I said, okay, the line of least resistance in the market, I don't use terms bullish and bearish, because if you say bullish, that means like you're predisposed for long periods of time. For me, that could change. So I use the term, and it's one that Jesse Livermore used to use. I use line of least resistance. So on April 9th, I felt the line of least resistance for the market was that it was predisposed to go higher. And so what did I do? I got aggressive. I aggressively went into the market. I even went on margin because I felt it's the probability of the market going higher is much greater right now. And it worked.
Let me ask you a question.
So I'm going to share.
No, is that part of your strategy? Because again, a lot of people like to try to just stay really consistent with what they do. So when you feel like you've got more of an edge, you'll get a little bit more aggressive and you put some more
100%.
right? All right.
If I feel the market is the line of least resistance is higher, that's where I get aggressive. But again, remember now, we're trading for a living, right? We talked about Kenny's father in the first episode. If you're in the market and you're going to stay in the market, if you're 20 years old, like my son's 28, right? And if he's going to stay in the market over time, he doesn't do this for a living. My son doesn't even really like finance, to be honest with you. He's a creative kid. He loves what he does. He works with videos and so forth. So he's not going to be watching the market every day. So if he's going to stay in the market for the next 30 years, to Kenny's point, and he brought this up, the market is predisposed to go higher over the long term, right? I'm at an age where I'm looking at potentially, my wife's getting ready to retire. If the market goes through a serious downturn, again, we haven't had a true recession for 15 years, right? If we do have a real recession, by the way, recession cycles historically are about every 8 to 10 years. And I believe the reason we've gone 15 years without one is because whenever we have an economic challenge, we just print money. And we're able to print money. Right. So we do it, right?
I don't know why we became so fearful of economic cycles. It's part of the cycle. That's why we learned about it in school,
You can't always be hot.
Right. Right. And it's okay to slow down. And then and then you trough, and next thing you know, you're in the boom cycle again. It's
you mentioned that you look at that trade. I saw your in your room the other night, and you were talking about that shimmy. What is that? The character from Shawshank Redemption? Right. And then it breaks out, right? Like if you understand historically that's what happens, then understand the patterns and use the patterns to your advantage. So I got really aggressive. Line of least resistance I felt was higher. And so last week, I feel, this is me personally, doesn't mean it's right. I could be completely wrong. For the way I trade, I got more conservative. I was up a lot. I booked my profits. And if I don't make another trade for the rest of the year, I've had a good year, right?
That's nice.
Right. So, but I'm not going to go into trades just because I feel like I have to.
I got a question for you.
Mm-hmm.
As far as the timing of your exit of these trades, right? Is it a combination of the fact that it's been a monstrous run, or are you factoring in that this is a seasonal time where people start to look to book profits?
All of those things.
After the 18th of August, this is now the 6 weeks of weakness.
Yeah.
We'll see if that plays out in this bull market from hell that we're in right now. But
that's one data point.
Okay.
Right. So I try to take as many data points as I can. And then again, it goes back to what's the probability, right? I'm just playing the odds, right? And now I feel because of this massive run we had, markets typically go through periods of digestion, right? there's a lot of optimism in the market right now, right? To use a term, who was it? Greenspan, Alan Greenspan. He talked about in the 90s, it was a famous term he used, irrational exuberance,
Yeah,
right?
we're way beyond irrational.
There's exuberance in the market right now, right? When companies that have no earnings, no nothing, their valuations go through the roof because it's all speculation. It's telling you the risk is on, right? The market uses this term animal spirits, right? The animal spirits are running wild. The
Yeah.
risk is on right now. But I've been through enough times where I know, and a lot of times the trigger is something we don't even know is there. It's lying underneath the ground and it comes up. When the market goes to a risk off posture, if some risk comes up that the market says, oh, we got to take some risk off the table, it could be fast, it could be brutal, right? So for me, again, I'm just playing the odds. So I feel right now the line of least resistance could be a bit, I think the line of resistance could move lower. Does that mean it can't go higher? Of course it can. I don't know. I'm not omniscient, but for me, I'd rather leave a little bit of meat on the bone than to encounter a big downturn and lose all my profits, right? So that's what I did, and I gave two examples of two stocks that I made really good money on. One, the symbol was LITE, and the other was CLHR. You can look them up. Again, this is being recorded, so you can pause it and write the tickers or whatever. But I sold both of those stocks a week and a half ago, and both of them had earnings last week. What happened? LITE did the classic, we call it beat and raise, right? They beat their current earnings, they raised their guidance, right? A beat and raise, that's a term you'll hear a lot. And the stock popped in after hours, but by the end of after hours, the stock was pretty much flat. And then the next day it opened up, same thing. It popped at the open, closed the day flat, right? And it had great earnings, good earnings and good guidance. What happened? Why didn't it go up? Because it was already built in. The stock had made a massive run already, right? Again, I'm looking at it. What's the potential upside? Probably nominal because it's probably built in, but the downside could be really bad if they miss earnings, if there's some kind of hiccup. And what happened? The other stock, COHR, there was a hiccup, and the stock dropped. That day dropped over 20%. It recovered a little bit at the end. Kenny made some money on it.
That's right, come in. Yeah, I'll
Right?
show it to you in a second when we get. Oh yeah, we're actually coming down. We've been rapping here for 52 minutes already. So
Yeah.
wow.
But that's what I do, right? So what I wanted to do, I wanted to set that up because we're going to close with our market observations. Hope you don't mind. We're going to skip the lesson part today because we're covering some really, really important concepts and we want to stick with them. But that's what I do. So for me, I'm looking big picture. All I'm doing, again, I'm trying to put the odds in my favor, right? And I knew there was risk because a lot of positive sentiment was built in. I didn't want to run the risk of losing all of my gains. And if I held on to COHR from its earnings, I would have lost the vast majority of the gains I had made. So that's the type of stuff I do. Okay. So market observations, we'll close with that, Kenny. If that's okay.
Sure.
I'll give mine real quick and then I'll let you close with yours so you can wrap it up for us. But I wanted to just say, I mentioned what I did. That's pretty much where I'm at. And that's kind of what I wanted to share in terms of what I see in the market. Last week, the market was, for the stocks that I trade, the biotechs did fairly well. I don't know why things were rotating into biotechs. Some of the stocks were flat, but what I want to do is I want to just provide a list of the sectors and the stocks over the last 4 months that I've made money on. Okay, I want to just do that really quickly so that I want you to understand, go look at these charts, look at these stocks, study them a little bit, and then you could start to see how I look at things and why I go into the stocks that I do. And I mentioned it, I'm going to mention them by sectors because I mentioned, right, the overall market is one variable I look at. The sector, is the sector in favor? And I can tell you over the last 4 months, I made a lot of money with a couple of sectors. One of them was uranium. And I'll talk about uranium more in the next episode because I don't have the time here.
Yeah, I'll
But
put the charts up. When you say the symbol, I'll put the chart up. And by the way, if we have the time, I'll show you what I did on that COHR because I never heard of the stock until you brought it up, and it was fantastic for 3 days. But go.
Perfect. But I got like a bunch of stocks, but I'm going to go through them real quick. So with uranium, and you guys can pause this and write them down when you want. But stocks I made big money on. CCJ, I made a ton of money on that. But I've been holding that. I held that for a long time. I went into that trade in July of 2023, I think, was where I started building a position. CEG, LEU, and ASPI. Those two, LEU and ASPI, I made triple-digit gains on those, just so you know. DNN, UUUU, 4 U's.
4 U's in a fountain.
UROY, EU, and UEC. Those are all examples. They're all within the same sector, and they sold off dramatically. And in April, they started moving back up. I made money in all of those stocks.
Wow, you got right across the gamut. You got cheap stocks, expensive stocks. You're all over the place. But all
it was a sector trade.
Very nice.
I was looking for inflection, and I felt they were way oversold. And I still feel long term, money's going to go into like my recommendation right now, because we're moving toward nuclear. Uranium's used in nuclear energy, right? We're still a ways off, but even governments are starting to look at nuclear energy as a clean source of energy. Even Japan, the real reason uranium went through like a 10-year plus bear market after the Fukushima incident in 2010. And nobody was going to touch uranium. Nobody was going to do nuclear.
What?
Now they're all moving back, right? So this is a trade. What I recommend, if you have unlevered money, you're not leveraging, you could buy these stocks if you're willing to hold, and that's the type of investor you are.
Wow.
This is a trade I believe over the long term you could do well with. Biotechs. I mentioned one on the last show, VRNA, made over 600% on that trade. Held it for over a year. TARS, SNDX, BBIO, TERN, ATYR. Those are all biotechs. And I'm on a Discord channel, and I talk biotechs with a lot of guys. But be careful with biotechs. They're a really different animal, and you got to really know what you're doing if you start investing in biotechs. We'll talk about that in the future. Software stocks, CDNS, ORCL, NBIS, U, ANET, MGNI. Made money on all of those stocks. Energy, EOSE, GEV, TLN, electronics, CLS. Made a boatload on CLS.
Wait, before you go any further, did you have all these positions on at the same time?
Not all at the same time, but a lot of them I was in multiple stocks at one time. Yeah, I was pretty well leveraged. When the market I felt it was favorable, I went aggressive, right? But some of these trades, and again, I'll close it there. We'll talk more of the other stocks in the next episode. But some of these stocks, I may only be in for a day, right? Like if it makes a move, I'm a big believer. I mentioned earlier, again, my 3 components is understanding the risk and putting the odds in my favor, systematically taking profits, and cutting losses so that it doesn't become catastrophic. Those are my 3 pillars, if you will, of my strategy. So sometimes a stock might move 12%, 15% in a day. I'll take at least a portion, if not all of it.
Sure.
Like to me, like that, I call it the low-hanging fruit. Sometimes that first big move, I'm almost 99% of the time I'm going to book profits on that first move. and it makes the rest of the trade easier for me, right? So again, these are all strategies. I'll leave it there. I have a bunch of other sectors I was going to mention, but I just want you to see, go back, look at the charts, look at again, if you're right about the market overall, and you're right about the sector, odds are you could do pretty well. If you're wrong about the market and you're wrong about the sector, it's going to be really hard to make money.
Yeah, nice exit on a lot of those stocks you mentioned. So that's a good play. And just looking just quickly at those charts, yeah, a lot of nice setups in there actually.
Yeah.
So after
and talk your COHR trade, by the way, because again, I got out of the trade. I don't know. I think I have to look it up, but I think COHR, I made probably over 50% on that stock. And if I had held it through earnings, I could have lost the vast majority of that, right?
Yeah.
But Kenny read a post I made online, and then Kenny looked at it and tell him what you did.
Yes, I mean here's that chart. I mean, if you guys see my charts, it's very clean. There's not much on here. What I'm looking at is the yearlies, and that's just yearly VWAP. You know, I swear by VWAP on all time frames. That's why, again, I start as a day trader, but you can swing and use this as investments. VWAP is the way because it really is the most important. If you want to call it a moving average, it's the most important moving average because it's the moving average of where the money went in institutionally to all these names. So, you know, in a nutshell, well, first I'll give you my view of what's happening. And I'm more of a QQQ guy. I was there when this thing was born. I've been trading it since inception, kind of getting an idea. And, you know, the Glick family has been long since 2003. So loving it. You know, obviously we held right through the Trump, you know, cardboard day when he, you know, just said a bunch of names and threw percentages out there. And I still don't know why everybody went that nuts over that, but fear spreads and that creates more fear, that creates crashes, and that's basically what we had. And once again, in this environment, every sell-off, especially for this magnitude, is met with usually an equal and greater move to the upside. I'm still a little bit amazed that we broke. I thought we'd have some trouble at all-time highs. I'm not going to get into what happened on May 12th, but we'll talk about it if you guys do tune into my show. Find me at hitthebid.com. We do this stuff for free for a couple of weeks. So everybody could get to know what we do. And I also do a free show on Thursday nights, but we'll talk more about that.
Let me just say, if anyone's serious about trading, if you're serious at all, you got a free opportunity to listen to Kenny every day. If you don't take advantage of that, you're missing out. Let me just say that. If you're serious about trading,
and again, we surround ourselves with a lot of people that know what they're doing. My crew is second to none. And what I really love is that my partner now used to be just a member of my room, and I showed him this VWAP, and he took it and ran with it, created an algorithm around it where it even just predicts the projected move of the breakout. So it's just that's this whole industry, and in life too. You surround yourself with like-minded individuals, and their success becomes your success, and your success becomes their success, and that's how success happens. But you know, let's go back to this thing, and just briefly, like I said, I mean, this move is, you know, it's unprecedented, really. I mean, I've seen 1998 to 2000 that we thought we'd never see that again. We kind of saw that repeat, you know, in COVID. Nobody thought from the COVID lows to what we witnessed. It was the most amazing thing, and up until this tariff you know, roll over into this new bull market that we're in. So again, for me, it's just it's this market it looks like it is kind of running out of steam, but every time you bet against it, it just fools everybody, and then it just becomes another buy the dip mentality. Because the only real sell-off that made any sense to me was we had a blow off top 2 weeks ago, and we did have a sell-off the following day. Usually that begins a slow, a little bit more of a downtrend and then a digestion, but no, we V-bottomed again and broke new all-time highs. I think that's what we're about to see now. I don't think the sell-off that we're going to see is going to be anything monumental, but you know, this is just the last 2 weeks. I just think this last 2 weeks is where we're going to go, and I'll show you just briefly on, you know, these multiple time frames that I use. This is, you know, I call it 10 days. I grab 10 days worth of VWAP. It's basically the blue line. You could even ignore it. That's just the daily VWAP. It's this orange line that really is what I'm worried about. So if you grab 15 days worth of data, and, you know, I'll just put it on an hourly chart for you. I didn't want to get too crazy. I'll do this for you when you come visit the website. This is what we do all day for, you know, 8 hours a day, crunch charts. this is where I'm worried about. So this is, this is showing you the last sell-off and where we just went to. Kind of ran out of steam. We're slowly giving back, but we just went from 398 to 583, and all this market has managed to do is pull back 5 points on the Qs. That's really not even a pullback. That's just a pause. A pullback would be if we actually start breaking prior lows, which is what I'm thinking might happen tomorrow going into seasonality. But then it's just about if and then. The way I trade, it's if then. So if we break that recent low, then we're going to probably revert back to these multiple time frame VWAPs. And if we do start to see some selling begets more selling. Maybe a little twinge of fear starts to creep in, because if you look at the VIX, the VIX is dead. And if you guys watch volatility products, one of my favorite products is UVXY. And this thing is notoriously always going down. So if it stops going down and then springs to life, that's an indication that the powers that be, they who control the market, are finally hedging or buying some S&P puts or doing some selling. So I need a combination of UVXY showing me signs of life and the market kind of running out of steam. But if we do, and again, if you guys are looking for shorts, I'm looking to short the Qs. And again, and it's been a losing trade for quite some time. It's a grind. But once that selling starts, I think this time it's actually going to continue. And the simplest saying is, you want to buy stocks when they're going up, you want to sell them when they're going down. We haven't had any selling. So when they start to go down, and like I said, if Warren Buffett calls me and tells me a stock pick, I'm still going to get it confirmed by my VWAP. So, this is, we're going to probably show this on Monday. We're recording this on a Sunday. Tomorrow, and again, I look at the futures, they open up at 6. I think there's going to be some selling, but that's just what I think. And I've accepted the fact that what I think means nothing anymore, because I'm a bear and I've been wrong. I have to wake up every morning reminding myself that I'm probably wrong about being bearish. And that's what gives me my edge. Like, I'm literally on edge because, it's like I'm a bear and I'm waiting for what I thought was negative about this and what negative about that, and it never plays out in the market. So I have to remind myself, all right, you're a bear and you're going to be wrong again today. Just do what the market tells you. But I think I'm going to be right this time, but still going to wait for the market to confirm. So, again, we've had this monstrous move, and I'm not going to be a hero. I still think the dip will be bought. And if we do get a couple of weeks of weakness in this market, it's just going to be another buy the dip moment, and we're just going to rally October, November, December. And I really do think as a bear, I've seen this environment before. People are not as exuberant as you think they are. There are a lot of people that are mad about missing this market. The fear of missing out is still out there. And the shorters who keep trying to short this market and get in the way of the freight chain, they have to keep covering. And then you have more fear of missing out. And that just in itself keeps the momentum going. So if we do sell off in the next 3 or 4 weeks, don't be, delusional about it. It's probably going to be a buy on dip, but we could get ourselves a nice 35 to 40 point sell off, which is only, 5.5%, maybe 6% off the top. And that's what I'm looking for.
And we'll close it with this. What Kenny was saying, again, we kind of have our hypothesis, right? Based on data, based on what we think is an edge, but we're never trying to tell the market what to do, right? And I said, for me, is it possible that the market moves higher? Yes, but I'm okay with that, right? Again, I have my investing strategy. I have my objectives, and I know what I have to do. I have to consistently make money. And if I go through if the market does have a radical downturn, I don't know, it could have, who knows? I don't have a crystal ball. Nobody does. I don't want to be sleeping outside because my wife throws me out of the house, right? So I have my strategy, and I'm going to make sure I don't lose my gains. I lock them in, and I watch the market. Let the market tell me. I'm not going to tell the market what to do. And I'm conservative at this point. I'm being nimble. And if a better entry point comes in, maybe I'll take advantage of it. Like I said, if I don't make another trade the rest of the year, it was a good year.
It's a good place to be.
Why take risks that I don't want to take, right? But that's me. Everybody's different. And that's what Kenny does. He goes in with he mentions, this is what I think could likely happen, but he watches the market. And if the market tells him something different, he's not going to fight the market and try to tell him what to do. He's going to go with the market, and he's going to make his trades based on what the market's telling him.
Right.
He uses the indicators So he's not just randomly doing something. He's using metrics to make his decisions. Right?
You got it.
That's what we do.
Right.
Okay?
Going back to the Warren Buffett again, is as much as I believe we're about to have a decent sell-off, it has to be confirmed. But once it's confirmed and you feel good about it, that's when I do take a larger position, because I tend to stay basically the same way every trade. It's basically, I trade relative to price. So, obviously it's just all about price. So if it's a $50 stock, usually I'm just using, 1,000 shares. If it's a $100 stock, I'll usually just buy 500 shares. Or really, it's the nature of the stock.
Yeah.
But in this situation, with the daily options, it's so much fun to trade the Qs because you have expiration every day and you could really leverage up. So if what I believe is going to happen is then confirmed by the technicals, this is where I go a little bit bigger, or not just a little bit bigger. I'm going to go, as we like to say, stupid large, bigly, as the man says. But I think, because and again, for me, I want to get paid on a trade that, and I'm not gonna bullshit you. I've tried shorting over this last couple of months. Trust me, it hasn't been working.
When the market's telling you it wants to go higher.
Yeah,
right? Look at
the spots and live to tell the tale, but most of the time it's either a loss or just a grindy win, and it almost wasn't worth it.
Yeah.
So when the selling happens, you've heard the staircase up, open elevator shaft down.
Yeah.
That's what I'm looking for. And if we get when the selling does happen, they usually just get it done in the first couple of days. It's like the market just pukes it up. Hold my hair. Let's get this over with. And not that we have hair, but
that's a bad example with us, bro.
Yeah.
Talk about hair.
Woohoo!
So let me close with this, because I think it's important. We talk about, what we look at. Here's something the market's been telling us it wants to go higher. So it's been telling us, right? Look at the CPI and PPI numbers that came out this past week, right? These are typically things that can move the market. When the CPI numbers came out, perceived to be relatively tame, right? The market went higher, especially the Russell, which is, smaller cap stocks, more speculative. You saw a nice move in the Russell 2000, right? Then on Thursday, the PPI numbers come out, the producer price index. So CPI, consumer price index, PPI, producer price index, right? The producer price index is normally the leading indicator that later shows up in CPI, right? So CPI came in relatively tame. Russell moved pretty nicely. Then PPI number came out on Thursday, and it couldn't have been worse. It was bad. It was hot. It was telling you, like, looks like there could be inflation. And the market's like, I thought the market, if you asked me, I would have told you, I think the market's going to sell off today.
Yeah.
And it hardly did anything.
I was on a broadcast as it was happening, and I said, all right, give it till about 10:38 and we should be green. At 10:38, we were green.
Because the market wants to go higher. You can't tell the market what
wants up.
It just disregarded that data, right? It basically didn't even take that data into account.
Right.
And so you can't go in with your own predetermined idea and try to make that idea work.
Well, I'll give you an idea. But as far as I've been concerned, it's like, as the bear, what I've noticed is that when the market does care about the economic data, it's twice as bearish, because generally bull markets don't care. Oh, CPI? Okay, have a nice day.
Yeah, it doesn't matter, right?
Right, doesn't matter. Nothing
cares about fundamentals anymore. Fundamentals don't matter.
Right.
Valuations don't matter. It wants to go higher.
When things start to matter, it's bearish. We'll leave it there, right?
We'll leave it there.
Let that one stew.
All right, folks, thanks. Sorry we ran a little bit over. Hopefully this information is helpful to you. I'm going to be traveling coming up in a couple of weeks, so I think our next episode we may film together if Kenny lets me into his house. I don't know if he will. And maybe we'll be doing it from Kenny's man cave together. And so thank you for again, we consider it a privilege that you give us your time. I hope you listen to guys like I told you, every time I listen to Kenny, my ear, I'm like perked up. I'm listening, because this guy has been around a long time and he's got a lot he's got to share with you. So keep tuning in with us. We'll keep trying to share information. We'll keep looking for your feedback, and we just want to be here to help you guys. So thanks again for your time. Thanks, Kenny, for your time as well.
You got it. And if anybody's interested, it's hitthebid.com is my website, and you could search me out. Just if you Google my name, you'll go down a rabbit hole of a bunch of stuff. But the website's hitthebid.com, Kenny Glick, and at HitTheBid Radio across all the TikToks and YouTubes and all that. All right. Hope I see you guys soon. The video will be living on my channel for a while until we get something else going on. All right. Thank you.
Peace, everybody.